The bottom line is whether you should form an S Corp really depends. Okay, that's the answer. There's no one-size-fits-all situation. A lot of people that I meet turn out to have been recommended file as an S Corp as soon as they form their LLC, and it complicates things unnecessarily. So what got me thinking about putting together this video today was I got an email from a client who's a tax-only client, and he just emailed me and said, "Steve, I've been doing a lot of research. I found out that doing an S Corp is the best way to do business, so I formed my S Corp, but I'm lost as to what to do next." First of all, there's no such thing as an S Corp as a business entity. You're either an LLC, which you form at the state level, or a C Corp, which you also form at the state level. And then you have an election to be taxed as an S Corp by the IRS. So it's not an actual form of business entity, but it's an election that you make to elect to be taxed as an S Corp. The main reason is tax savings on self-employment tax. Regular income tax is based on your total income, and it depends on which tax bracket you fall into. But self-employment tax is taxed at 15.3% on your self-employment earnings, and it covers Social Security and Medicare. So you're probably thinking, okay, great, I want to save money on self-employment taxes, so let's file as an S Corp, right? But not so fast. Think about this. First of all, there's a cap on Social Security. So the government only taxes you on Social Security up to a certain level of income. So if your income is above that threshold from a W-2 job, you may already have paid in the max into Social Security. So you wouldn't be actually saving any money by electing to be an S Corp. The other reason why you might not want to do it is because you're just starting out and you're not even going to have a profit, right? So if you're just starting your business and you're going to lose money or have a very minimal profit, the savings may not be worth all of the things that you have to do once you elect to be an S Corp to actually be in compliance. One other thing that I want to cover is that this election is not available for non-residents of the US, and I work with a lot of non-residents, so if any of you are watching this video, don't even worry about this because you can't elect to be a shareholder in an S corporation. One, paying yourself reasonable compensation through payroll, and you have to determine that reasonable compensation through market research. It actually has to be a defensible salary. You can't just pull it out of thin air or base it on some percentage of your total profit. So that requires you to set up a payroll service and have the cash on hand to make regular payroll to pay yourself your reasonable salary. And that's essentially what you would normally pay someone to be in your shoes. Number two is you have to have a separate business tax return, which is called a Form 1120S, a much more complicated tax form than just a single member LLC or sole proprietorship tax return, which is on your personal tax return. It's just a profit and loss statement. If your income is over $250,000 in sales, you have to have a balance sheet on the tax return. So you have to have good bookkeeping, then you have to be able to produce an income statement and a balance sheet to have that tax return prepared. And just having another tax return prepared increases the cost to you. Third thing is you have to track your basis. So you simply can't take as much money out or put as much money in without any tax consequences. Now you have a separate legal entity that requires tracking of what's called basis. And you can't take out more than your basis, which is essentially your investment in the business plus your accrued profits that you haven't distributed yet, and less your distributions and your losses. And so you have to keep track of that separately. And if you take out more cash from the business than what you've put in or what you've earned in profits, it becomes a taxable profitable gain or taxable capital gain. So you simply can't just move money in and out without consequence like a single member LLC or a sole proprietorship. A lot of people that I meet turn out to have been recommended to file as an S Corp as soon as they form their LLC, before they've barely even started doing any business, and it complicates things unnecessarily. In other cases, somebody who has a high W-2 income that might not have much benefit from filing as an S Corp has done that too just because they heard it was the best thing. So when should you actually elect to be taxed as an S Corp? Generally speaking, if you don't have any high W-2 outside income and you have a good profit that's continuing to increase and you plan on being in this business for the long run, then you should definitely have a conversation with your CPA about whether it makes sense to do it. Now, it's not really hard once you conclude that that's the right way to go to do the election, and it can actually be done retroactively. And as you get to the end of a tax year, if you haven't done it already and you're operating in a different business form of entity that's eligible to elect as an S corporation, you should discuss whether it makes sense to do a retroactive election and you meet your reasonable payroll before the end of the year. So bringing it all together, what I really wanted to drive home with this video is that you should really consider whether or not you should elect to be taxed as an S corporation. Don't just go right into it or do it because you heard a lot of people on the internet saying that it's a great way to save money. It's really something that you should carefully think through because it does have consequences and complicates the business format, and you should just really think through it before you make that election. If you like this video, please click like and then also subscribe, because every week I'll be producing new videos with information like this. And if you want to work directly with us, go to sellercpa.com and click book a call to make an appointment.